Mr. Vaidyanathan of IDFC Bank to talk about how things have transpired for the quarter gone by, and more importantly, where is the franchise headed at a time when the banking sector per se is showing signs of strength, stress, and yet promise. Mr. Vaidyanathan, so nice to have you on ET Now. Thank you for joining us. Good comes with bad. And for the quarter gone by, there is a lot of good, but there is a lot of bad also. What shall we start with?
You should start with the bad.
And the bad is that there is a big departure.
Because people will want to hear what really happened this quarter.
Yes,
and
please.
We need to explain.
Yes, please. So why don't you just, in a sense, indicate to us that what transpired and what caused stress for IDFC Bank for the quarter gone by?
So this quarter, this microfinance business, which is really in the news across the system now, there is stress in that sector actually. I think many things came together. The heat wave, the elections happened. There was a bit of over leveraging on that segment because a lot of lenders wanted to lend to that segment. So many things came together, and there were also floods in Tamil Nadu. So just strange storm of events that all came together. So the sector's delinquency has been going up, and you may have seen this from other players as well. So in our case also, we did have a more delinquency in the microfinance sector. Now, the good thing is that we have compared our delinquency as compared to the rest of the industry. There we are finding that our SMA, just for technicality, SMA is the pre-NPA stage, 30 DPD to 90 DPD, that's 60 overdue account. That number was only 2.5% as compared to similar placed banks, etc., which are at about like 3.5 to 4%, or maybe 2.7 to 4%. So comparatively, we were better, but still, end of the day, there is stress. So what we did was that, we were earlier providing at 90 days past due. We advanced it by 2 buckets of the entire 30 DPD stage, which is 2 stages before the NPA. We have taken 99% provisions. So think of it like we saw the issue, we just recognized it, and hence the delinquency in the microfinance sector went up.
But are you reasonably confident that you do not expect stress to accelerate in the entire microfinance business? Because the economy has not accelerated back. The stress points in the economy which caused the microfinance issue, they still exist.
It's not about the economy, actually. If it was the economy, then our entire portfolio should show a delinquency. It's not so. If you see, we have given a very detailed presentation on page number 32 of the investor presentation, where we have shown that MFI, the SMA, which is the 30 to 90 DPD, that is going up from 1.2 to 2.5. But the other books are all very stable. So it's not the economy. So, but coming back to the MFI sector, we saw this way back in December of 23, when we saw the center meeting attendance falling. So what we did was, at that stage itself, in a proactive manner, we started insuring our portfolio. So today, 50% of the portfolio is insured, which will reach 75% by March 25.
So consciously, I have a follow-up question on the MFI business. Consciously, would you be slowing this business down? If you would be slowing this business down, could this have impact on the aggregate portfolio yields?
See, we should be very careful what comes first. We have to keep our portfolio safe. So to that extent, yes, of course, we have already slowed it down. It was like 12,500 crore or so, 13,000 crore, already brought it down. But that, we are in the market, and we should be very careful. So we have reduced dispersal, our portfolio has come down, that's part of our life. If there's a concurrent impact on some income, etc., that's part of life, we'll take it. But, while we'll slow it down, I want to make it clear that this is a very important segment for India. It is a lower part of the Indian economy. This is the first time they're all coming to formal credit. We should not really choke off the pipes on this segment. And they are women, they are entrepreneurs, they are micro entrepreneurs. So they're a very important segment. So we have no intention of closing this book. It's an important segment. We live, we learn, we refine the criteria, and keep growing. It's an important segment for the country, important segment for us also.
What about rest of the portfolio? There is a big write-off also which you've taken in a single account. Everyone is curious to know that what has gone wrong. Did you see this coming, and what could be the implications of it?
Okay. Now, as you know, this bank had about 22,000 crores of infrastructure loans. So let me say that we have brought it down substantially, came to about 2,500 crores as we speak. This account, this quarter, there was this announcement that a toll, this company actually collects a toll when vehicles are entering Mumbai or exiting Mumbai. So that toll collection, the government announced that there will be no toll. So our client got stuck in the midst of it. We know that they will not be able to service the account, well enough from now on. They were already NPA, but at least they were paying. But that we believe will be trickle down. So we really don't carry issues. If you remember how we dealt with Vodafone, how we dealt with Reliance Capital, how we dealt with Diwan Housing, Cox and Kings, just the way we deal with it. So we saw the issue, we've taken it. Because we don't want to prolong issues. And we really don't want to keep the future quarters hostage to this one account. So we saw it, we've taken it, but it's over and done with. But next quarter, you will not see the name of this account anymore. It's basically it's called the Mumbai entry point. There's an entry point into Mumbai.
If one really looks at the last 3 years of IDFC Bank's trajectory, the growth has been strong, deposit accretion has been fantastic, and you've been gradually and surely improving on your ROAs. Can I say the big picture which you've been sharing in terms of mobilizing retail deposit, your aggregate credit growth, and your path to improve your ROA, that still is intact, and what has happened for the quarter gone by is not the true picture of what lies ahead?
See, the quarter that went by is certainly not the net profit is got affected by these items. They won't repeat. At least the toll won't repeat, and microfinance will play itself out. Will reduce from here. The credit cost of microfinance. Now coming to the core, that's why we said the bad news first, so that we get it out of the way. But as far as the good news is concerned, this quarter had some really good news on many fronts, which got lost in the din of these two issues. What were the two? Our deposit base is still growing at 32%. It is something in this country, and now reached a reasonable scale, a good scale of 2 lakh, like 18,000 crores. Customer deposits. 80% of our deposits is retail, coming from retail branches. And CASA is like almost touching 48%, which is very healthy in the system. So these are some very significant stuff. And our loan growth is also 20% plus. So I think if deposits grow by 30, loans grow by 20, and loan asset quality, by the way, excluding microfinance, I want to clarify that not clarify, I want to let everyone know, excluding microfinance, the rest of the book, the NPA is good, the SMA is good. I want to call out one number so that people are aware. Gross NPA is 1.9%, and net NPA is 0.5%. Including MFI, including everything. So, so the overall asset quality is also good. So I want to leave it at that.
Do you expect this kind of in credit growth, what you've reported for the quarter gone by, would you like to maintain it, or consciously you could be forced to slow it down looking at the health of the banking sector?
See, we are always very cautious of the health of the sector, and frankly, the overall sector is quite good. Like I say, overall environment. Except that we should be very careful. We are very conscious of asset quality, and we are proud also. Like it's been like 14, 15 years now. We have never, not once, had a blow up on credit. This quarter we had microfinance. I don't deny. But that happened to everybody. It's not our bank had alone had a microfinance problem. So coming back to the point, therefore, therefore growth should continue. Deposit growth should continue. We are growing at 30%. That's doing very well for us. Our brand has become a very powerful brand now. and it is attracting customers and so on. So that growth should continue both on the deposit side as well as the loan side into.
Okay, those